Yeah, g'day trader Sam here from Trade to Prosper. It's been a while since I've did the last update, and it's usually for some good reason. I've been sick for a few days again, and I missed this opportunity for sure. Anyway, so this is Bitcoin. We're looking at the 1 hour chart. When we look at this, what we're going to do is look at the small time frame, what the likely possibilities, and how to trade it, and then look at the bigger picture and why we substantiate that this is a critical level. All right. So what we had. Then you might see it on the internet a few times. It is a straightforward head and shoulders, and this is a grind. You can see how it refused to go past the zero point 0.5 Fibonacci. Yep, it wicked up to there, and there was a resistance. So we had a little mini head and shoulders here. We had the left shoulder and the right shoulder and this grind line. As price dropped, and we can measure this to just show you that, yep, it hit its target. There you go. After that, it found the area of liquidity because all the prices were coming in. So that was a minimum stop loss level. So this is the stop loss level, and so all the stop losses were under this level. And so when heads and shoulders comes down, there's liquidity, and all these stops are lost. So all the traders are stopped out. They get a bunch of liquidity and then push it back up. However, we had this double top on this neckline of the head and shoulders, also equal to 618 level from the top to the current bottom. So that was a good opportunity to short because it's a double top. And if you know the swing failure trade, that would have been a good, that was a level. So you got your point B. So you got A, B, C, and when you lose that level, that's when you short, and obviously it came down pretty hard. So the neckline was there as well. Now this area was area of liquidity because the ones that came in here will have the stop losses here, and this just wrecked those. So those stop losses of the longs have been closed out, and now what we've got to see is what's going to happen here. So I'll pull my Fibonacci from this reference, and it looks like a potential swing failure trade, but we want to see it go past this neckline here. So if it goes past that neckline, and then we might see it up. So it might just come back down, and it might just come back up like that. And once we pass this level, I do feel like it'll come back up. And so we have a range, the current range there, and the current range there. All right, that's breaking it down with current scenarios, how to trade it if that scenario plays out. So the area of liquidity, this could easily come down. Now what we're looking at, if we look at the rest of the chart, here we go. What we have is this green zone. This green zone is represented by this section here. So we have the bottom here and the top there. So just a range. We have this point of reference for POC, which is a point of control from volume, and this black line represents that. So let's just clear that up. We had the previous high. Yeah, that was a previous high. So we represent the highs and the lows. So the range. Now, if the daily closes below this level, then I do believe we'll come back down to this liquidity level. This liquidity level, that was the last wick there. So all the longs were coming in from here. So just below this would be liquidity to close those longs off. And then we could probably go up, might even dip here to get these guys as well. So it might be able to come down here if we lose this level, guys. So it's likely to come back down, get a whole bunch of liquidity, and then back up again. So that is a scenario that I'm looking at. And there's another component to it. And so what I'll do is I'll go through the whole bunch. This is the monthly 21 average, the monthly. So you can see the liquidity area is pretty much around it as well. So for that, that's what I have in the short term, current scenarios. and I'm going to talk about potential going higher as well. All right, so if this was to reverse, we're still going to have a few levels of resistance in there, and we have a new range. But if it comes back into that range, this is a bullish sign. Okay, moving on to the next chart, weekly chart. I'll close the MACD. So we have this level. So from a weekly channel, it is a bit of a doozy. You have this. Let's just close that off. Got the wrong stencil. We have our bottoms. So we use that as a reference, and you will use the weekly top as a reference, and you can see we're in the channel, and even here, this acted as the middle of the channel resistance, middle support, and so on. So this is a critical level. On top of this was previously strong support, even here, bit of resistance. So this zone is strong resistance, a pivot or a key level, right? So that's a key level. And every key level, if you look at what we had here, when we had a key level hit, and this was about 25K, you can see the pullback twice. We're going to a small time frame, but a key level always has a bigger pullback. And so I'm using this reference, just like here. We use this reference there to there, and actually from there to there. And you can see how the golden ratio comes into it. Yep. So our golden ratio is here, and we're looking for, if it pulls back, this is a nice area, and that is our 26K range, 26 and a half, just up below that liquidity level. So the liquidity level that we spoke about. So we can see that as well. The worst case scenario is that if it goes through it and keeps coming down, then this is bad. We don't want to see that, but I doubt that happens. It's got to retry again before. But anyway, we have this trend line, and that will be the third touch. So we have that. So it might just come back down. We might be here for a while, guys. We might be here for a while before we break up or continue on the bull run. Now let's move this across. I did a lot of drawing there. What I want to do is go and look on that from another perspective. Let's just leave there for there. On the weekly, we can see that RSI is still upward trend. On the daily, it's pretty bearish. So if we go to the 3-day chart, let's have a look at that. There you can see bearish divergence playing out. And if we go to the next chart, not that one. Oh, bugger. Let's go back to this one. Let's clean that up. So looking on the 4-hour chart, here's some key levels. If we do the bottom to that top there, you can see that we still quite didn't reach our 0.5 fib there. This is the monthly 21 moving average, pretty nice. And that's going to look like acting support. Now, if we look at this potentially, we can also say if this is a wave 3 to 4, so let's just have a early wave count. So if this is our wave 1, 2, 3, 4, I'm still hoping wave 5 is about there, just a bit more higher. And then we'll probably have an ABC correction. So what we have, our liquidity level is there. It's right around the 50% level. Okay. So if this is a wave 5, the thing is it might just fall short of it going to that top level. So we need to see how this plays out. But it could be, so if this is for wave 5, then we've got our ABC correction. And our ABC correction could take a moderate path. If that was our top, we might just go a moderate path like that and then go up again. And then we can look at potential channel. Yep. Something like that. And maybe we just come down to here, or the 21 month moving, and that will be a moderate moderate level to come down to, if that is wave 5. But wave 5 is likely to be current range or up to there on a small time frame. I'm still hoping that it goes up to the 0.618 level there. That will be a strong resistance. But then we have this level here as well. And I'll just move it up. And you can see how this acted as support. And so we still probably could get up to that level. Now let's look at it from another perspective. And the 0.5, here you go. So that is active as support. Still likely to get a bit above, maybe a wick above it to kill all those stop losses that are shorting. But anyway, that's another way of looking at it. Now let's look at it on a smaller time frame on the daily on this one. Now I did my Fibonacci on this one. So this is all fibs. So what we've done, we can just hide this for a sec. We got that one there. So from a way of a methodology, if this is our top and this is our bottom, we put our Fibonacci accordingly. And you can see the 1.414 is perfectly as resistance. The 1.272 was previous resistance, and that was 28, whatever it is. And then we break above it, hit the next Fibonacci, and this channel line could be the resistance. Yeah. So there is good reason for that fib to act as a major level. We might be able to get to that level here, 1.618, but we need to look at other ways of looking at it. Now, if I was to change this perspective with a non-log perspective, you can see it's actually the 1.618. So this is the issue I have. Which one is it? So this could be a significant level for a deeper pullback because it's a 1.618. Yep, that makes sense. They didn't quite hit it, but then again, it doesn't have to be perfect, does it? So give a bit of it, you can squeeze that in and it's perfect. So this is holding it up. If we lose this level, guys, you can see what's going to happen. We're going to have some volatility coming down, and that's where we need to get this Fibonacci level to that. And that's not the right one. Let's pick another one. So look, now it's the other fib chart. If we look at from all the way to the top to the bottom, we've got this red one. 0.302 is significant. As you can see, it came into place as well. So this 0.5 is what I'm looking at. And whereas the other one? Let's look at this. That's not in. And the 0.236. Let's see where's that coming from. Previous as well. Okay. And that's from a different log perspective. So if we were to change the logs, you can see how that works out. So again, this plays out, and then we've got these other Fibonacci levels. Fibonacci all over the place. Right. So you can see the dilemma. Is that going to be the strong resistance? Or is it got slightly more to go? And that's the 1.414, and we've got slightly higher. This 0.5 is, to me, significant. The other way of looking at this, so this is looking at from that perspective, top to bottom, and then the extension. We can also do this. If this is wave, so let's do the Elliott wave count. So if this is a 1, 2, if this is a 3 and 4, this is what's going to make a difference. So if we get that to that level, you can see the 1.618. Give it a bit. Just get this onto that level there. You can see the 1.272 acting as support. 1.618 is acting as support. You could probably just adjust a bit just to make it aligned. Give or take a bit. You can see that, right? Now, see the complexity. 1.618, again, this level is important. So if we have daily, if we got something closed on the daily there, like I said in this picture here, we are likely to come down further. So if we do that and go to our zoom in, our daily is 29,100, all right? 29,100, 29,000. Roughly there, yeah. So we can't close below that on the daily. If we close below that on the daily or on 4 hour, I dare say that we're going to come down further deeper, and then we're going to go into this zone, and then it's likely that we play this thing Fibonacci out, and we come down to the bottom. Now that is a milestone because look at this one here as well. We had our own correction as well here, so that was our A, B, and the deeper C, because that was a significant level. So we had this pullback. Now see this level, we had a formation of some sort. You can even say a rising wedge of some sort, and you can see the deep pullback, reattempt on the 618. I think. Let's see. There was a formation there, from there to there, not even the 0.5, and then deeper all the way down. Get the liquidity. So all the longs that came from here will have the stop losses, and that's where it got targeted. All the longs from here got stopped out and then up. So they go liquidity hunting. All the longs from here, this is where the stop losses will be. So this could be a good level, and the next level is here. So that could be another level thereafter, but I doubt it if it goes that deep. I think this is the target here, and it's equivalent to our 618. When I do the Fibonacci from that level to that level, it's a Fibonacci there. So let's look at other stuff that's giving us an indication. Tether dominance. So looking at the tether dominance, this is acting as support all the way through. And until we break this level, oops, let's change that color. Until we break this level, we're not going to go bullish. We need to break this level to go bullish for the next big run. In the meantime, we had this bounce, and we had this resistance, and on 618 as well. So keep an eye on this. This could, if this breaks up, that means we're going to drop a lot. And then I'll have this target, and then this target, and that doesn't look good. So that will be the formation target. That will be the target if it breaks out of this formation. This is tether. Okay. In that case, if that scenario plays out, guys, be mindful that total market cap for the alts, we're looking for this consolidation to be bullish. So yes, it pulled back. I expected it to pull back because it was a main level. We identify that in the group. It's just under resistance, and also we've got this trend line as support. So we can't lose this consolidation. Eventually it's going to make either a big move down, or up. Okay. So when we look at the bigger picture, you can see we might just come down to here for support and then back up again. But so that's our neckline. That's our first touch, second touch, third touch. Sometimes the fourth touch usually breaks through. So that sort of fits into our model. Hold on, let's do that. And the last bit, where is it? Bitcoin dominance. So you broke above this level and came back down again. So keep an eye on this. If this comes down, beautiful. That means the alts are going to go, and that means that that's broken. That we part this broke this